I'm Diane Rosignola, here in San Francisco at NAREIT's REIT World, our 2018 annual conference. I'm here today with Jay Shah, CEO of Hersha Hospitality Trust. Hi, Jay.
Hi, Dan. How are you?
During the last year, Hersha has been busy recycling assets and renovating and repositioning several high-potential legacy hotels. How do these efforts position the company for the year ahead?
You know, the last couple of years' work was part of a broader strategic plan to sell hotels in our portfolio that were a bit older than our portfolio average and that had a lot of capital needs in the upcoming years, and to take the proceeds and value created in those hotels over time and redeploy those into hotels that were more focused on coastal gateway markets, that were newer hotels and had more attractive EBITDA growth trajectories. On top of a lot of the hotels that we recycled and purchased, we've also spent close to $150 to $180 million investing in legacy hotels in the portfolio, where we felt that the potential would be better mined by investing additional capital. So across the last 2 years, we've repositioned existing hotels, close to about 8 hotels in our portfolio, putting them on a better track to drive greater value in markets that have evolved around them.
And looking across your core markets, Philadelphia in particular stands out. What are some of the factors behind those results?
Well, Philadelphia has been a really interesting market. There's been a lot of fear of new supply coming into the market. And fortunately, Philadelphia is continuing to see population growth. It's primarily an eds and meds market. And so the educational institutions and research institutions that are all based in Philadelphia are growing at a terrific cadence. I think that's driven overall demand for the market.
Why has Hersha chosen a bi-coastal, multi-segmented approach for its portfolio?
This is an approach that we really honed in on across the last 4 or 5 years. I think the coastal markets that we focus on are the major central business districts and the central commercial markets in the United States. Close to 40% of the country's GDP is generated from the markets in which we operate our hotels. And I think that gives us great access to a variety of corporate demand generators and allows us to really leverage positive macroeconomic trends that are, that we're enjoying in the market today. We also find that these markets have the greatest overall real estate appreciation. And so the residual real estate values of the hotels, beyond the operating advantages that these markets bring, really helps drive the NAV of our portfolio. A lot of folks ask, why all the different segments in the markets? And what we have come to realize over time is that we're generally quite agnostic to the segments in which we operate, but we're very focused on the markets. And by clustering hotels in these markets that cater to different consumer bases, we're able to leverage our operating advantage in those markets, and we're able to really share insights across the portfolio at all different levels of the demand in the market.
Jay, it's been great talking with you.
Great, thank you.
For more from REIT World, visit REIT.com.